We live in interesting times with AI becoming dramatically more powerful. Should we be excited or afraid? Today, we're thrilled to be joined by Brett Winton, Chief Futurist for ARK Investment Management, which invests at the edge of disruptive innovation. Brett explains why AI is driving a great acceleration that will be more impactful than the railroads, than electrification, and the internet. You don't want to miss his insights on how this will impact human health and longevity, why we will put data centers in space, and when robots will become a fixture in the home. You especially don't want to miss how to invest in this future. Let's dive in. Brett, welcome to the show.
Thanks for having me. Happy to be here.
We've had economists and strategists and traders on the show. So for our audience who might not be quite familiar with it, what is a futurist and how did you get into the future business?
Maybe a futurist is an economist, a strategist, and a trader all wrapped into one. But we think that kind of at this moment in technological economic history, it's more important than ever to understand where technology is going because it's going to impact so much of the world economy so dramatically. And so then the futurist title is really my job is to audit and drive the technological modeling at ARK that guides our investments across the venture portfolio and the public equity book, and in terms of, business development and partnerships that we sign throughout the world.
It sounds as if being a futurist is, I like that how you said they're all things wrapped together. But it sounds like you might be less focused on, this quarter's earnings or even this year's earnings and looking for sort of the big moves in the coming years. Like what thinking out of the box seems like what you have to do almost all the time.
Yeah, I mean, look at, every year we put out this report that's a big ideas report, which is essentially capturing where we think technology is and where it's going to go over the next 5 and 10 years. And what's great about publishing is you can go back and you see where you were right and where you were wrong. But if you go back 5 years ago and you look at the first page of big ideas, it was deep learning, which is deep neural networks, which is driving these AI systems, is going to change the way in which software is written. And as it turns out, that's true. And it was spot on. The entire way that we interact with our digital lives is transforming. And increasingly, those digital lives are impacting kind of the real world of atoms as well. And so being able to understand where the future is going and drive those forecasts really transforms the way in which you allocate assets. And over the course of a business cycle, I think it's actually the most important thing you can do. Yes, the long term is composed of the short term stacked up a bunch of times. But if you're just focused on the short term, you actually might miss the discontinuous move that's likely to occur in autonomous mobility or in reusable rockets, or that you won't appreciate unless you do that long-term modeling.
Can we compare AI? Would you compare it to railroads, electrification, maybe the internet, which most of us remember? Like, where does AI stand in the pantheon of advancement? When we try to compare it.
I mean, actually, it has no peer, as in there's no real comparison. If you go back all the way to the 1800s, the investment wave in AI, we think, is going to collectively exceed, as a percentage of GDP, at least on an annual basis, the investment wave in railroads, which was the previous, call it title holder. I think that there are useful analogies to be drawn from all of them. Railroads, you built extraordinarily large businesses based upon deploying capital and then driving efficiency through that capital. That's clearly what's happening in AI right now, is we are the world, and a handful of companies are building monumental amounts of compute resources, and they're doing so because if you use those compute resources to train an AI model, it can deliver productivity to end users, and those users don't even have to pay full freight on that productivity. They don't have to pay you the full value of it to get you a great return on building the underlying compute. So the very rough math is, we think that AI software is going to monetize at a rate of $7 trillion per year by 2030, and that around $1.5 trillion is going to be spent on the underlying infrastructure to support it in 2030. And so it's going to be great for everybody who buys AI and great for everybody who builds AI, and it's causing every technology around it to accelerate. And we think almost, but not quite, $100 trillion in market cap will accrue to AI companies by 2030 throughout the value chain. And so there's also, from an investor perspective, the opportunity to make, real great allocations. So principally, in across our funds, ARKK, ARKW, and our venture portfolio, OpenAI is a very large position. They are the biggest player in terms of user hours. They are the biggest player in terms of enterprise monetization, and they are at the leading edge on model development and investing the most compute resource over the next few years into making those models better. So we think they're incredibly well positioned, and that AI is, so people will look back on this business cycle as the decade in which the world profoundly changed as a result of AI. And it'll be a more profound change than anything we've seen before, than electrification, the railroad, certainly than the internet. I mean, it touches all sectors, and it's a much more monumental build out with much higher ROI, return on invested capital, as far as we can tell, and as far as we forecast. And so I do think that this will be, future historians will look back on this moment as the point at which, where you can say this is when the great acceleration began, and it's going to impact the underlying rate of growth, and kind of like profoundly impact positively like the quality of people's lives on a global basis.
So a couple questions on following up on that. You mentioned the ARK Venture Fund, and this is the fund that can that invest in things that are not, some things that are not publicly traded, like the OpenAIs of the world. And if I've done a little bit of research, but clarify that for me, is it sounds like the minimum to be able to invest in that is actually shockingly low. So this would be, it seems like a remarkable opportunity to sort of get onto the ground floor. People always talk about getting on it. If you had bought a share of Berkshire Hathaway in 1966, maybe there's an opportunity here. So it is a very slow minimum for ARK.
Yeah, and that was actually one of the design principles when we started. From the beginning of ARK, we started ARK in 2014 and have always focused on disruptive innovation. We've had to focus on private companies to do our technology forecasting. And so often, we wrote a white paper with Coinbase and while they're raising their Series B, and they're like, hey, you should invest in us as well. And we said, well, we don't have a client vehicle where we can do it. And we always thought it was unfair that venture exposure was only available to those who are already rich. It seems, people should be able to invest a reasonable proportional amount in venture, just like they can invest a reasonable proportional amount in gold or anything. And so this portfolio is designed to be available to everybody, at least within the US context. And we're working on global distribution as well. And it has exposure so it allows people to invest with a very low minimum, and it offers them quarterly liquidity up to 5% of the fund. And so its largest position is SpaceX. I think its second largest is OpenAI. We have Anthropic, we have xAI, we have Replit, we have a lot of companies that you probably haven't heard of that are really interesting and provocative. And it is, companies are staying private longer than ever. And so getting exposure to those private companies before they go public, we think is important to people's allocation to innovation generally. And with, Anthropic and OpenAI and SpaceX, and now in particular, it's really vital. So it's a great fund that I'm happy to be a part of.
I'm going to have to look into it. Really democratizes it a bit, and hopefully the form's not too long. Now, a little bit onto the side that people are concerned about in terms of AI. If we talk about all this investment that's going to go in there, does that investment is probably going to starve other sectors where this investment might not have been, they might have gone into just I don't know, railroads. I mean, obviously not a one, but
Yeah.
railroads where we could have like fast trains like the Chinese have, or like the they have in Japan. But so what sectors could it potentially starve? And then the second question is one that's on a lot of our viewers' minds, is what's going to happen to the people? We have this great productivity, and people can work less, but then they might get paid less. So how are we going to pay for all of that? So I guess the first part first is what sectors are going to suffer a little bit because of this focus going into AI?
Yeah, I mean, I think the magic of capital markets is capital will flow to the opportunity with the highest returns. And actually that's what you want. There are high returns because the products being produced by AI are really valuable to the end users who are buying them. So that could be somebody working in an enterprise like me who's doing modeling and forecasting. You could you'd have to pull codex out of my, dying hands before I let it go. Or it could be useful to someone like my mom who has like a funny health thing that she needs to know whether or not she has to go into a doctor for. And so she asks and gets good pre-doctor advice that helps her determine whether or not she should go, because sometimes she can't go. And sometimes it's actually not just inconvenient, but dangerous for her to go. And so that's how it's useful to her. And so this is profoundly useful. I mean, in my own life, I literally have circumstances where I think it probably saved somebody's life because we had access to really good information from a near expert in an AI system that otherwise we wouldn't have. So these are profoundly useful systems, and they are commanding a lot of capital for good reason. And in some ways, it's catalyzing the growth of industries that are really necessary and good. So one of the concerns people express is, where is all the power going to come from to power these AI data centers? And some of them will not be on the ground; they'll be in space. And so then you're going to spin up a lot of solar manufacturing in the U.S. that you otherwise wouldn't have because of AI in space, which then will mean that solar on the ground for people probably ends up being a lot cheaper than it otherwise would be. Same story terrestrially. There's a company called Boom that is in the venture portfolio that's developing a supersonic civilian aircraft, so Concorde for the 21st century. It's very difficult to develop a civilian aircraft. Well, if you look at GE, which has its own aircraft engine line, they have a small bit of the business relative to aircraft engines, which is selling these engines on the ground to power stations to run natural gas turbines. Well, Boom can do the same thing. And in fact, they have better characteristics or better levelized cost characteristics than GE. And so they are selling into AI data centers. They're sold out for a couple of years, and that's helping them to capitalize and build the supersonic aircraft. So actually, the point at which we get a supersonic civilian aircraft probably is moving forward because of the AI investment demand that we have. Now, what does it take from? I'm not sure that there is like a pool of capital out there that was previously sitting on the balance sheets of, I don't know, Amazon and Google and not doing much of anything, sitting in treasuries or bank accounts, and it's flooding into AI. So it probably sells down kind of some average return or even lower than average conservative return assets for these slightly higher risk but better ROIC assets. And so there is a capital flow characteristic. But there's a huge kind of investment surge here. And by the way, to build those data centers, you have to hire people to dig in the ground and build them. So if you look at the GDP growth statistics in the US, actually the AI data center investment surge is driving marginal GDP growth in a really profound and important way. And we'd expect it to accelerate. And that's just laying the foundation for the software that's going to be built on top of it. People express concerns about jobs. In some ways, it's almost ideological or philosophical. Every time there's a technological turn, this concern burbles up. Oh, this is going to put people out of work. Typically, and in fact, every time, it actually creates more jobs, some of which you can imagine, some of which you can't. I'll give you an example. Right now, I saw you can put a point of view camera on your head and get paid for washing your own dishes just to provide the data back to somebody who's trying to train a humanoid robot. That's clearly a new job. Because
Wow.
I was going to wash my dishes anyway, and now I'm getting paid to do it. And if you look at kind of like the even the software industry, there are signs of green shoots where we need more software coders to manage the AI agents that are doing coding. And if you look, say, the driving space where autonomous robotaxis we think are going to be a very big deal. If you do the full math, like 99% of driving miles in the US in light duty vehicles are done by manual unpaid drivers. Like that's me and you. So what happens when a robotaxi becomes widely available at an economical price? People decide I'm no longer going to drive myself. I'm going to pay for this service at something actually more than the cost of just operating my vehicle, but less than the cost of operating my vehicle plus my time that I'm required to drive it. And so that'll drive actually a huge surge in paid for service. And somebody's going to have to operate that network. There's going to have to be people that are monitoring the vehicles, not one for one, but maybe 50 per one. And if you do all of the math, there's going to be more professional drivers because of robotaxi sitting in an operation center than there are professional drivers today in the US. So you're actually going to create more driving jobs by having autonomous vehicles than you otherwise had. So there's plenty of examples like that where it's like, well, there's clearly like need for human creativity and input in these systems. And it's overall expanding the pie for everybody. So I think it'll be, great.
I mean, that's a really, really interesting point when you're saying, instead of air traffic controllers, you probably have to have car traffic controllers after a fashion. You can't let the whole system run by itself, right? I had you brought up a couple of things I wanted to ask you about. First one is all of this about AI in space, and I know that there's writing about it's so much cheaper to lift per kilogram into orbit now. Why do we want AI compute in space? Is it a heating and cooling problem? And then I also want to ask about robotics because you mentioned a lot about robotics, and boy, that seems very far away to me. But it seems like you guys don't think so. So first, why are we putting
Yeah.
this stuff in orbit? Isn't that kind of sort of counterintuitive?
Well, I think that like ultimately what an AI company cares about is how many gigawatts of compute power can they get access to inexpensively. And over the immediate term, if I need a gigawatt of compute tomorrow, I'm definitely going to go to Amazon Web Services or CoreWeave and say, I need to rent compute from you. I need to rent GPUs from you to run my AI model. But if you look out over the course of this decade, the cost for renting a gigawatt of compute power 5 years from now is probably higher than it is today because you have to build out all of these sites and you start out at the juiciest, easiest to build site. And then you go and have to figure out how to motivate power and cross political thresholds to get kind of a data center built somewhere else 5 years forward. If so, every single data center project is its own set of negotiations to buy the land and get in power and make sure the local politics are cleaned up so that people are, not going to throw themselves in front of the bulldozer to prevent you from building and, figuring out the tax structure. If you are putting AI compute into space, as long as you have an inexpensive launch vehicle, there's plenty of real estate up there and you get 24-hour sunlight because you can have the satellite designed so that solar panels always face the sun. And the math works out where at a certain cost per launch, it becomes cheaper to have that compute power in space. And it's going to become whatever cost it is today, it'll become cheaper as they manufacturing scale kind of their launch vehicles and kind of their satellites and make them more efficient. And so, whereas on the ground, you look out 5 years, you're like, well, that's going to be more expensive than today, but it's still a great deal for an AI company. In space, you say 5 years forward, that's going to be less expensive than it is today and continuing to get less expensive. And so over the early 2030s, I think actually the compute powering AI will become increasingly space dominated. But over the course of the next 5 years, it's probably mostly on the ground. So that's kind of like, the cost to launch a kilogram into orbit used to be $10,000. So that's an expensive,
Right.
2 pounds of weight. Now we think SpaceX can do it around $700 on a Falcon 9 operating today. And if they get their just do their bottom booster and then have the Starship, which is their new top booster, incinerate, we think they could do it for around $300, $400 a kilogram. But if they can make the Starship successfully land back and launch it again, then they can get down into the $70 per kilogram range. So from $10,000 to $70 a kilogram gives you a lot of room to like throw up a lot of satellites, including AI compute satellites.
You know, it's I
Go
mean,
on.
this, I'm sorry to interrupt, but this is exactly, I guess, what a futurist does, right? You think out of the box saying, I don't have to worry about real estate. I don't have to worry about power. I just have to get it into orbit and hopefully I don't have to fix it very much. And by the way, this takes care of probably my cooling problem as well. That's really a remarkable way of
Yeah.
thinking about it.
Well, it definitely, yes. I mean, there are issues with cooling in space as well, but you have to engineer, like the Starlink satellites that are up now, they have to deal with cooling, with radiative cooling. But you scale that up. And like the true answer of it's like somebody makes a claim. Elon Musk makes a claim. A quantum computing company makes a claim. Well, how do you prove or disprove that claim? Well, you do the work yourself and say, does this make sense? And as it turns out with AI compute, yes, it makes sense and we can model it. With quantum computing, typically it doesn't make sense. And so, but we do that work as well to check and forecast. And so we have our own set of expectations that sometimes align with and sometimes differ with the companies that are making the claims, and where they align and then the company is priced as if it's not going to do the thing it says it's going to do, well, then that's a good opportunity to deploy capital.
It's interesting, and what you just said about how many it could eventually get down to $70 a kilogram to get into orbit. Imagine you asked how much would it cost me per kilogram to build this data center in the on the ground. People would look at you saying,
Right.
I've never thought of it that way.
Right. Right. Well, you have to, yeah, you have to optimize to a different set of vectors. And like the very, very rough math is that at around $300 to $400 per kilogram launch cost, we think there's a crossover point where it's cheaper to put the compute into space.
So sorry, how many hundreds do you think that will be?
$300 to $400 per kilogram is where we think the crossover point is, where it's cheaper to put it into space. But then the next stage in that is like, how light can you make the satellites that you're lofting into space, given the amount of chips you want to put on them? And there it becomes a engineering and a manufacturing scaling problem.
Right. Right. Wow, that's really, really fascinating. So I wanted to ask you about robotics, and we talked about robots briefly, and I'm a big Asimov fan, and he was big into robots. How soon could we really get a humaniform robot in each house? To me, it seems really far away, but I know it just sounds like not so far away the ways you guys are thinking about it.
Well, in each house is probably pretty far away. However, I think that you'll have operating capable humanoid robots in the late 2020s, probably selling into businesses and maybe into high-end or high-income households. At scale, you could sell literally, tens of trillions of dollars of these things over time. I think that that's a possibility. It probably is still, in terms of like being generally purpose capable, in early 2030s type event. I think in terms of crossing critical commercialization thresholds, it can happen in the late 2020s. There is the humanoid robot form factor is incredibly complex and difficult to build, and the software is as challenging as the hardware. And we're still we're still in the stages where it's like, wow, this looks like an amazing demonstration of what this thing should be able to do, but people don't yet have it in their hands doing things that are really, really, really useful. And I think over the next couple years, you'll begin to see the green shoots of that, and then they'll begin to sell in a meaningful way. But ultimately, it's the true scaling of the business is probably in the 2030s.
That doesn't seem so far away, to be perfectly honest. I mean, you want to talk about, basic caregiving. I mean, that's just my first thought. I wanted to move one thing that you have crypto, and I wanted to talk about that a little bit. We've had crypto had a great run, and then we had that sort of event in October, never really recovered. Now I wouldn't say it's crypto winter, but it's sort of like crypto exile. It's the seems the space isn't drawing a lot of interest. People are saying that Ether and Solana, it's overbuilt. The structures are overbuilt and they can't use it. They can't monetize it. But I suspect that your view on crypto may be a little bit different. That this is an opportunity to get in while the market is relatively quiet. What do you think about crypto now and going forward in the next few years?
Yeah, I think there are two distinct things going on. One, there's call it cryptocurrency, the financial revolution that's happening where Bitcoin is tip of the spear. And that's really a multi-decade project to displace the underlying mechanism by which money works. And it's pairing with stable coins in a really constructive and unique way. And over time, we think Bitcoin could become worth, $2 trillion, or sorry, 20 trillion, so $1 million a coin, just in fulfilling like a small percentage of that niche of cryptocurrency. Then there's what we think of as the really financial revolution, the smart contracting revolution. And that's Solana and Ethereum and tokenizing assets and getting all of the efficiencies you get out of tokenizing assets. Currently in DeFi space, it's still very much, I would say, early adoption and mostly for nerds, and people haven't figured out yet how to use it, and the kind of societal ramifications haven't played through. And it is in a state of, call it quiescence right now because of the sensitivity of the assets to liquidity in the broader markets. And so because they trade down, people stop paying attention to them. The builders and companies working on the underlying assets, including tokenizing real world assets, continue to build. And then suddenly the animal spirits are back, hopefully when the macro economy becomes our macro strategic environment becomes less volatile and, the Fed cuts again. And I think you'll see, a return to these risk assets and people being willing to underwrite the future. And so on an aggregate basis, we think the smart contracting protocols could be worth 5 trillion by 2030. And that's modeling against really single digit type percent adoption into the overall financial ecosystem, almost like dial-up internet days style adoption. But the opportunity is so vast to basically take what's going to be $1 quadrillion in financial assets that right now, the way we pay to manage those assets is we pay financial intermediaries around 3% of their value, a little more every year, and tokenize those so the cost of administration, falls by, we think, 2/3, with a lot of the value accruing to the underlying apps and decentralized protocols running them. And so that's the basis for the forecast. And I think these things are cyclical, as are all capital markets. So there will be a period where we're back. It's just, and typically like when people aren't paying attention to something is the time to really invest resources into it, because then you create a springboard for yourself when they start paying attention again.
Now, you guys have ARK has a Bitcoin fund, right? Essentially, it just holds Bitcoin. The expense ratio seems to be like 20 basis points, which is amazingly low. Why would I deal with it myself? I should just buy that. It's essentially, it holds Bitcoin, right?
Yes, it's an easy way to get exposure to Bitcoin where it's safely custodied for you, and it can, intermingle with your other financial assets with the rest of your portfolio. So ARKB. Yeah, it's a very efficient Bitcoin vehicle.
And for the other ones, the other things that the monetizing, tokenizing things that you were just discussing, is there a vehicle within ARK to be able to invest in that as well?
Yeah, so ARKF is our fintech fund, and so it has exposure to kind of the digital wallet space as well as some of the underlying assets, at least as expressed in kind of corporate equity wrappers that we can invest in through that vehicle, and kind of like the platforms that are building tremendous businesses on top of these advances. So both Robinhood and Coinbase are investing heavily in these areas. You can argue that Coinbase it's almost like the JP Morgan of the 21st century with a crypto first perspective and being able to vertically integrate through all financial functions. They really have an interesting exposure.
But they charge way more than 20 basis points for Bitcoin. I do want to ask that, and thank you so much for so much of your time already. In terms of when you look at this great acceleration thesis, and you paint a very optimistic picture, which frankly we really need, with everything going on today, is what clouds could you see in the horizon? Is it a inability to create enough compute that's being demanded, which we seem to be seeing more and more? You see Anthropic having to throttle some of their users quite substantially in recent weeks and months. Is it something regulatory? It's something that we haven't seen yet. What worries you when you get up in the morning and look, you peer into the future, what's are some of your concerns?
I mean, I think that the future that we have is the future that we're going to believe in. And if I think the ability to get access to compute is partly governed by the fact that if people try to, I don't know, murder city councilors that approve data centers, even though a data center uses as much water as like two McDonald's franchises, that's going to suppress activity and shift it to China and shift it offshore, shift it to areas that are worse for, the Western world and worse for the world as a whole. And so I do worry about kind of the combination of political and regulatory blowback against technology. I think it's incredibly misguided. Right now in New York State, the union is trying to fight against Waymo being able to operate in New York City. That's basically being pro-death and anti-labor, because we think robotaxis will create more jobs than currently exist in professional driving. And so insofar as these actors who sometimes are operating in extreme bad faith can espouse these views that are really anti-human, I think that's a concern for me. Over time, I think the advantage of these technologies is they are portable. And so if I am in Texas and able to ride around for less than $1 per mile being driven, and then across the border in a neighboring state, I'm still stuck driving myself like a schmo, the people in that state will either move to Texas or they will agitate for their politicians to change the policies. And I think that's the direction we're going to go. But it does require people to understand that there's huge incentives to espouse negative information, and those are the voices that get most amplified. And kind of the route to kind of a better life is really a route that a route through technological abundance, which I think is within our grasp if we can kind of allow it to happen.
Well, Brett, thank you so much for your insights. It's really been a remarkable conversation. I look forward to having you back on the show again, probably in 6 months when, there are a lot new ideas or sooner, there are new ideas and really great things that we can talk about. Thank you once again so
Great.
much.